What's going on, guys? How you doing, Gravish? How you doing, Guggen? Let's just get right into it here. Spy, another strong day, another update. Remember, guys, I told you guys it was looking a lot like the March rally. Again, we do not know when these rallies are gonna end. They are bear market rallies. We will come back down. What's up, Raji? How you doing, bro? Welcome back. It's about time. We have one gap left on SPY to fill all the way up to 401.44, which is my final target where I will start getting short again. Hopefully we get up there. It will just make for better put setups in the future. What's up, Ricky? What's up, Andrew? And hopefully we go and fill this gap because it's going to make my life a lot easier when we start playing to the downside again. What's up, Vlad? What's up, G Money? How you doing? Um, Anyways, we did have a couple, so QQQ and SPY were actually lagging IWM today. Strongest one today by far were small caps. It was definitely leading the way here. Go over it. IWM was up 1.6% almost today. At the end of the day, the noticeable thing at the end of the day there was when SPX was trying to go back to high of day right here around 1, 2 o'clock. It did take out high of day and it did get that high of day, whereas SPY and QQQ did not. So that's something to notice. Their small caps are very noticeably stronger. As you guys see right here, this was the run up where IWM took out these morning highs and we stayed on top right there. So we closed very near the high of the day as well. So IWM small caps do definitely look the strongest. XLF failed to close above the 50-day. QQQ is well over the 50-day, and SPY has closed the second consecutive day over the 50-day moving average, which is a good sign so far. Other than that, VIX has lost the 200-day to the downside. What's up, Gravinder? What's up, Carlos? And VIX has closed under the 200-day on the daily for the first time since April 20th. So let's go look what happened the last time. April 20th, the VIX closed below. On SPY, that would put us way back here. So that basically marked the top. The last time the VIX closed a daily candle under the 200-day moving average basically marked the top on the bounce for the market. So let's see if we get some follow through tomorrow. I wish I seen that pattern earlier, but let's see. I'm not too heavily long. I do have some long exposure right now, but I'm mostly getting back into my UVXY equity and these C puts. I'm starting to build a position there for August as well. Other than that, I do have those Oracle puts still, and let's see what happens. But anyways, VIX, last time we closed below was April 20th. That basically marked the top on the last rally. If you guys look here in March, during that rally, we actually closed 1, 2, 3, 4, 5, 6 days straight were closed underneath the 200-day moving average, which marked the end of the rally in March as well, as you guys hear around the 28th, 29th. So right around the end of this big bear market rally right here was when VIX closed 6 straight days underneath the 200-day moving average. So do we grind a little bit higher, fill this gap, VIX then gets an explosion? That's a possibility you need to keep in the back of your mind. Just remember that. Just look at back in history. It's very clear what happens. And so far in this bear market, it's showing you clearly what happens when VIX gets under a 200-day moving average. It's usually time to start building up those shorts again. But let's see what happens this time. The SPX hit new highs today from yesterday and from overnight. You guys see we're breaking out of all kinds of bullish patterns. A lot of bullish stuff is showing here. But you have to remember, we're in a weekly and monthly downtrend, so this is still a bear market rally until it proves otherwise. And when will it prove otherwise? I'd say it has to go and start taking out these previous highs here at 4170s, 4180s, somewhere around here, maybe 4200. If the rally takes out 4200, then maybe I'll start believing that the bottom is in. But for right now, I don't see it as any kind of any type of shift in the longer term trends. I'm looking for 4017 to start getting short again. Rut last night, we stopped at 1800. Overnight, we got over it. Little dip below on that news today, and then right back over it. And now we're at our next resistance on Rut here, which is 1830, 1834 area. Very strong resistance from a while ago. If you guys notice, these levels are just the same. We've been pretty much range bound for a long time now, since about May. We're at the same levels we were at in May. Same resistances coming into play, same supports coming into play, and let's see if we can hold. What do we do between this 1800? Either we're going to take out the 1834 to the upside and we're going to continue ripping, or we're going to range bound here for a while. Honestly, if we just keep ripping up, it gives me even more conviction that we have another leg down on the market, because this is not a normal rally. We need consolidation, healthy consolidation, and another move up, or we need to break down. It's not a healthy rally. UB, I remember I called the bonds bottom here back in June 16th, and I drew this pattern. I haven't touched this pattern on the daily on UB since. Basically, we put in a low, we put in a lower high, we put in a higher low, we put in a higher high, higher low. Now we need to go and take out this high over here of 115.67, so bonds can continue their daily uptrend. Or else, if we take out this trend line and start closing below it, it looks like another bear flag that's ready to go down even more. DXY marked the top again. We're looking for, we already hit our first target, which was around 106, but we did bounce today, so it went up to 107 on that indicator. 104.80 is my final target on this DXY if we get the sustained rally. If we don't get a sustained rally, then you're going to have to cut it. The dollar is going to go up. Meta, beautiful setup. Let me show you why I took these lottos in the morning. You guys see this big falling wedge, one of my favorite patterns. Finally broke out. Remember last time we had one breakout day right here, and then next day straight down 7% the next day. So let's see if Facebook can get momentum tomorrow. Then we start to change these patterns in the favor of the bulls. Last time we tried a peekaboo, straight down 7% next day. If we don't have a red day tomorrow on Facebook and it continues up, we can fill this gap to 186. Sorry, we have a gap to 186 here. What did I see it? Yeah, this little yellow line here, 183.68. 183.68, and we missed it by 8 cents, guys. So 183.68, and if we get over that, then continuation. Baba's pissing me off right now. It's a beautiful setup. Everything is still intact, so I can't technically get out. It's kind of pissing me off that it's not going with the rest of the market, though. 50-day moving average is being held. Retested the weekly trend line perfectly. Everything technically is bullish here. I just don't understand why it's not running. Maybe we need some news or something. The one bearish thing I did see is 8 cross back underneath 21, which is not a good thing. But again, we're holding the 50 days, so it's very hard for me to cut it. Technically, it still looks fine to me. I just wish it would go a little faster because we don't have much time on this rally. Well, I don't. According to my plan, I don't have much time on this rally, so I would like it to start going soon. Tesla's up 30 bucks, so that's great for the market. Yep, $30, so probably something good. Let's see what the conference call says. Let's see how it opens in the morning. But for right now, it looks very good. LMT, this is the one that I added today for some more long exposure. I didn't want very much long exposure, but I like this setup. LMT, it's not like Ukraine-Russia war is ending anytime soon. I bought dividend shares here at 370. I was cutting them in the 450s or 460s, if you guys remember. I wanted to add those back at 467, which would be a retest of that falling wedge, and it would be the weekly 200-day moving average. We got it after hours for their earnings, but it did not fill me. I had 367 flat as a fill, and it went to 367.20. So basically, I didn't get filled on the dividend shares. I wanted a piece of this run up. The reason being, I think there's a run up. Obviously, I just told you there's a catalyst. There's war. They're talking about World War III. LMT is not going anywhere. And when we lose a big level and you reclaim it, it usually rips. And right now, that big level I'm talking about is the 200-day moving average, which is at 397.37. Actually looks like a rejection there today. If we don't get over that level tomorrow, I will cut these calls without thinking twice. Here is C. This is the puts. I took $45 puts for August 19. Reason being, I've never seen C start closing daily candles outside of the Bollinger Bands, as you guys see here. And it's closed 3 straight. So if you zoom out on this chart, I did actually see a couple more instances, which was... This is... Yeah, so it grinded up here, but look at that reverse. So we have till August 19th. Let's see if we get that kind of V shape right back down. Citibank, banks suck in recessions. The numbers on all the banks aren't that good. I doubt it's just going to keep going straight up in a bear market. So let's see what happens. AMD really flexing its muscle today with that CHIPS Act, 74 level. Remember the reversal. Let's see if we get the same type of move out of LMT, guys. 74 break was a key level on AMD, reversed. And look at the rip we got. One retest back, and then rip. We ripped about $15 on AMD so far, so if you added some equity or something, congratulations. And Tesla is up 24 bucks. So everything so far looks good for the bulls. Let's see if we can get that 4017 to make our lives